Let's take a look now at the financial summary. The information provided in this summary format is likely to be a digest of the profit and loss account, the balance sheet and the cash flow. And you need to understand how these work together, because any business must have an integrated model which allows you to see the impacts of what happens in the P&L account, impacting the balance sheet and then resulting in the subsequent cash flow. And all these things are inextricably linked. Some of the things you should be looking out for are the margins that the company makes. Take a look and understand its fixed costs, which are normally the costs not only of production but also of the people in the business, or indeed the premises and that sort of thing. And then you have the variable costs such as marketing, basically covered under SG&A, sales, general and administration. So you need to understand what the financial structure of the business looks like, and in order to understand its profitability and how successful it's likely to be. Understand from the top of the P&L account down, what sales is the company making, what sales is the company forecasting to make down the road, and are those forecasts realistic? Are they achievable? Are you looking at some amazing hockey stick, or is it actually a much more realistic and achievable target? And evaluating forecasts is always a bit of a finger in the wind exercise, but after you've looked at a number of them, you'll soon see if you can see the company's been around for 18 months and it's sold 6 units and it reckons it's going to sell 106 units in the following month, that is probably an over-optimistic forecast. Understand too the time frame you need to look at. Typically these forecasts go out for 5 years, and it may be that's the sort of time frame you need to look at to hold this investment before you're going to get a chance to exit it. So really understand the time frame and the likelihood of an exit at some point, but against the progress the company is likely to make. So you do need to go into this with your eyes wide open. So what sort of exit do you think this company is going to achieve? And if you look at the forecast, you put a multiple on the operating profits, or the EBITDA of the company in 5 years' time of maybe 5 to 6, then it'll give you some idea of the opportunity exit. And of course, you need to understand how small a piece of the company you're going to own at that point. But also look at the company in the light of other opportunities. So this is the way you're looking at it as an exit. And you're going to see, against other companies, how is this one going to fare? And this is part of the purpose for doing this exercise. But think as well, who is likely to buy the company? Is it going to be a competitor? Is it going to be a financial investor? Is the company go to IPO? So there must be some clear thought gone into how the shareholders are going to be able to realize their investment. And of course, this all ties into the valuation they're asking for the business today, and of course the valuation expectations down the road as well. So if you have these things on your checklist to understand, then you are going to be getting an awful lot out of this financial section. So this is some of the points, these are some of the points you need to address when you're looking at the financial summary.